Hello friends, so let's start with Nifty. So today Nifty opened with a negative and then it recovered and it stayed at this level for quite some time, and then later on around or after 3 p.m. we saw a upward trend, which is good. So currently Nifty is holding 18,000 level, which is good for us, because if Nifty has to break this level and move to the next levels, then it has to sustain above 18,000 level. Otherwise, if it goes below 18,000, so we may see it going down again. So this is the level that Nifty has tested so many times. This is the fifth time that Nifty is testing 18,000 level. If it breaks the 18,000 support, then again we can see a downtrend. If not, if it sustains here for some more time, then we can see an uptrend in Nifty. But as we say in market, nobody knows it with 100% certainty. Anything can happen. So what we can do, what is in our control, is look for the stocks that we like, the companies that we like. If those are available at good discount, keep on investing, keep on adding more shares of those companies, so that when it goes up, when the temporary problem resolves, we get good returns on our stocks. So now let's look at Nykaa. Nykaa was 4.66% down today, and the reason is that the CFO of Nykaa, Mr. Arvind Agrawal, has resigned from this post, which obviously is not a good news, and we have seen the market reaction as well, because the news was out within the market time. Let's also look at the chart for Nykaa. So here is the chart for Nykaa, and you can see it has been consistently going down by forming lower bottoms. So I would suggest, or I would not do anything on this stock right now, because one, it is going in a downtrend. Until we see a reversal, technical reversal, we should wait and watch. And also the news of CFO resigning, it's definitely not a good news. So for now, let's wait and watch on this stock. The company's business model is good, but right now company is struggling. So I don't think right now it's the right time to be in this stock, but you can take your call based on your research and findings. Our next stock is Easy Trip Planner, and there's a good news for Easy Trip Planner shareholders. In the last 2 days, the share has shot up by 40%, which is great. And the reason why you see such a increase in the share price is because after the split, the share is available now at very low price, which is around 50. So it has become more affordable. So the more retail investors are able to buy the stocks, and that's why you see good volumes in the stock, and then the stock price is going up very fast. Let's look at the chart as well. So here you can see there's a big upside that we have seen in 2 days, and we discussed it earlier as well. This is the pattern that this share is following. It goes up and that it remains in the box for some time, then again there is a big upside, then again it remains in the box, again the same pattern, goes up, remains in the box, and again it has shown the same pattern. Now let's see if the share comes back and start consolidating around 60 level, if it is following the same pattern. But the company is very good, the business is very good, the company is profitable, making good acquisitions and expanding very rapidly. So it's a good company. The existing shareholder the long-term shareholder can still hold the share, and the short-term shareholder can think of booking profit because it has given a good run-up in last 2 days. Next news is on Asian Paint, although it's a little old news, but still I think it will be valid and relevant. So Asian Paint joins hand with 7.3 billion conglomerate to manufacture VAM. Now what is VAM? Let's look at it. So here you can see VAM is nothing but vinyl acetate monomer. It is a significant intermediate used in the production of wide range of resins and polymers for paint and coating, adhesive and sealants, and a myriad of other industries and consumer applications. So in short, it is a raw material which is required for Asian Paint to manufacture or to create its paints. So if Asian Paint is getting into creating this particular raw material, this is a good news, because this will eventually reduce their cost further and increase their margin further, which is a great thing for a investor, and it's a good step by a company to increase their margin. Next news is on Paytm. So Paytm, you can see, was down 11% today, and the reason was because Ambanis are also trying to enter into the financial business, which market thinks that will have an impact on the current Paytm business. So you can see that the Paytm plunged to a record low on Tuesday after Macquarie Group Limited analysts flag risk from billionaire Mukesh Ambani foray into the financial services business. So more bad news for Paytm. Now we are at the chart of Paytm, and you can see it has been continuously falling, and it has made its new low, which is around 475. So one rule which I follow for my personal investment is that I do not invest in companies which are not making profit. So until unless they can prove that they can make profit, they are profitable business, I do not personally invest in those companies. So do your own research in case you want to invest in these kind of companies which are still not making any profit. Even if you are very sure, if you like the company, then to avoid the risk, invest very little amount so that it does not impact your overall portfolio. So that's it in this video. We will meet in some other video with new information. Thank you.